This video is going to describe all the pros and cons of options trading that I've learned. Hey guys, I'm Mr. Maciek. Welcome to the channel. If you're interested in making money investing in real estate or anything else about building your net worth, then please subscribe below. That's what this channel is all about. Also, if you want to make more money, all you have to do is click that like button. That's right, you may not know this, but every time you click the like button, you increase the probability of you making money because you're going to get more information from YouTube about how to make money, because that's what this video on this channel is all about. And YouTube's going to learn that you are interested in making money. So please click the like button. Well, let's get right into it. Let me tell you first of all, what are options trading? It's basically the stock market, but you're not buying shares, you're buying the option to buy shares. So it's a little confusing, but in a nutshell, here's how it works. You are paying somebody to be able to buy 100 shares or to sell 100 shares of a particular stock. And there's an expiration date and there's a premium that you pay for it at a certain stock price. I know it gets a little confusing, but the bottom line is, if you think a stock is gonna go up, you buy calls. If you think it's gonna go down, you buy puts. If you're gonna buy a stock because you think it's gonna go up, you can actually make more money by buying a call for that stock. And if you think a stock is gonna go down, instead of short selling that stock, you can buy some puts. Now, let me tell you what are the pros and cons and what I've learned over the last little while of my options trading challenge. Which reminds me, if you're not familiar with my options trading challenge, I am taking $1,500 in 2021, at the very end of 2020 actually, and converting it into $130,000. Now, I do have a whole series and I update it every 14 days, every Tuesday at night. The video comes out. So please check out my link. I'm actually gonna give a little card here that's gonna pop up if you are interested in that. Let me tell you something. Right now, it's amazing. You cannot believe the return I'm getting. So first, I want to discuss the risk of options trading. Basically, the difference is this. If you buy a stock, let's just say for $5, but it ends up going down to $4, essentially you have lost $1 on that stock. If you buy 100 shares, that's $100 that you've lost, but you still have some capital in that investment. If you're going to go buy options to buy a certain stock and you think it's going to go up, then you might buy an option to purchase this stock at $5 in the future. And you're going to pay very little for 100 shares of that option. And if it goes up to $5 or $5.50, you're going to make quite a bit of money, a lot more than that $1 raise here. You're probably going to make hundreds of dollars on that one. Now, if you want an in-depth explanation, please comment below and I will do a video if I get enough requests for it. But just know that with stocks, you are only risking the money that it can go up and down. But with options, you're actually risking the entire premium that you paid for that option to purchase. So if on the date of expiration of your option, it does not meet or go above that particular dollar amount of the stock, then you are out 100% of your money. However, contrarily, there's that benefit that if the stock price does go from $4 to $5 and you bought a call that you can buy it at let's just say $4 and it goes up to $5, you're going to be able to buy 100 shares at $4 even though it's worth $5. So you're risking just a little bit of money here to make a very large gain. And just like everything in life, high risk, high reward, low risk, low reward. That's just how life works. So if you are that type of player,
that means you might be a gambler,
then options are definitely a good idea to start leveraging into your portfolio. Now, I'm just talking about basic options. There are a whole bunch of like covered calls and there's a whole bunch of different things with options that you can do, but I'm just talking the level one, the basic buying calls, buying puts, and then selling when you're ready to get out of it. So the possibility of rewards is huge. That's one benefit. Here's the second thing that I learned is that when it comes to the expiration date getting closer and closer and closer, that is where emotions really start rising high. I consider myself someone who has a low emotional imbalance. So I'm able to control myself very well under points of stress and so on. But here's what I've discovered, that sometimes I buy calls out 1 month, 2 months, 3 months out. And that is a very low stress investment because even if it goes down in the short term, in the next week or two, I still have a lot of time to make up for that loss. But as I purchase calls that are maybe just 7 days out, I only have 5 business days, trading days, assuming there's no holiday, to actually make that money back. And now I'm risking 100% of my money. But when it comes to long calls, meaning ones that are just kind of further out, then I have a lot more time and the stress is low. So I actually like these a lot better than the ones that are short term. But once again, short term, high risk, high reward. You have a lot better chance of making a lot of money in the short term one. Just also be ready to lose 100% of the money, because if by the date that they expire, which is almost always a Friday, if that share price is not where you need it to be, then it's over. You have lost 100% of your investment. So if you're okay with losing 100%, well then, I guess go for the short term. But if you want to have a little more time, then go with the longer calls, meaning go out 1 to 2 months out. And if you want even better safety and security, just buy the share, and you can only buy a couple shares. You probably can't buy 100 of them for the same price. Hey, if you're liking this video, please click the like button. Also subscribe, because I talk all things money. Now, lastly, I want to talk about patience. I consider myself a very patient person. And when it comes to stock option trading, you have to be very patient. Let me give you a couple examples. So I've got into some options where I purchase it and I see that it's down 5%, 10%, 15%. Now, a lot of options traders and stock traders are going to say put a stop loss on it. So if it falls below a certain dollar amount, it automatically sells. And I tend not to do that, because what I do is I just get in a position that's not so big at the beginning, and then I add into the position if I still believe in the product. But what happens sometimes is that I really just want to sell. I see it's down 45% and I'm like, wow, I can't believe I'm down 45% on my investments. Is it better to recoup the money that I still have left in it, or is it so that I can invest it into something else? Or is it better to just wait and maybe lose 100% of it, right? And it depends on the dates of the expiration date, but it's really important to practice patience. Let me give an example today. Today is February 11th. And this morning, I sold one of my options that I was holding. It was Hyliion, ticker symbol HYLN. And I sold it at 10:45 in the morning for 12 cents. It was a $16.50 call. I had 37 of them. And what happened? Why did I sell? They were expiring tomorrow. So I had $500 left with my shares. And what happened is the following. Hyliion released some news. And just 4 hours later, that 12-cent went up to $5. And multiply that times 100 shares, and multiply that times 37. Grand total, I missed out on $18,000. And it really hit me. And even though I'm not an emotional person, it strung some strings of emotion. So practice patience, learn from my mistakes. This is why I'm making this video today, is because it is definitely something that I still need to work on, even though I consider myself a very patient person. And once again, these short-term calls, the ones that expire 1 week out or less, I was down to 1 day, they really are stressful. And for some reason, I chose to cash out on the $500 and take my losses and keep what I have instead of risking that $500. And I know there was a very low probability of anything happening, but it happened. It skyrocketed. Literally, Hyliion went from $15.50 to $21, and I lost out on all of it. So guys, please practice patience. Please practice loss mitigation. Please practice not going YOLO, not taking your whole account and putting it into some meme stock or something that you heard about, or a meme call option. What I like to do is I like to first get in at 5% of my whole portfolio amount into a call. And if it drops more than 30%, I'll add another 5%. Then after that, I'm 10% in, and that's it. Now, if I see something that's really incredible, that's really gonna turn around, then I might add just a little bit more, but that happens very rarely. Hey, I hope you've enjoyed this video. Please watch this. It's my latest video on my options trading challenge. If you like that kind of stuff, also watch this video if you want to get into real estate investing. It's really how I started building my wealth.